Hello, everybody, and welcome to this episode of the Debt Hotline. We're super excited for today's topic and guest. Our topic for the day is how to rebuild your credit while paying off debt, and we're going to be having a live Q&A with policy leader Gwyneth Borden. We're super excited to have her as a guest. She's also the founder and CEO of Remynt, and I wanted to take a few minutes to introduce her and read about her. But I also wanted to say that my name is Hannah. I'm with Team Solo. We have these podcast episodes that we host each week where we go over real questions from real people about debt and how to resolve debt. And so, yeah, I wanted to take a minute, like I said, to introduce our special guest, Gwyneth, today. Gwyneth Borden is the award-winning founder and CEO of Remynt, which is a groundbreaking fintech platform that empowers consumers to rebuild credit while they resolve their debt. She's a solo founder with a bold vision, and she's designed every aspect of Remynt, from raising capital and building a consumer-first product to managing partnerships with regulators like the CFPB and California's Department of Financial Protection and Innovation. Gwyneth has more than 15 years of leadership across public policy, tech, and civic sectors, and she's worked with institutions like the U.S. Senate, IBM, and leading nonprofits. She is currently redefining what debt resolution can look like with Remynt, and is trying to build a consumer-focused, tech-powered, and credit-positive tool for consumers. Gwyneth, can you tell us a little bit more about yourself and fill in any gaps that I might have missed?
Wow, I mean, that was such a wonderful introduction to me, so thank you very much. Remynt is really my labor of love. I mean, I think my entire career I've followed things that I felt like actually also made the world a slightly better place, right? So I've always pursued policy and issues, whether it's like affordable housing or transportation. I've always really been focused on the intersection and where business and public interest meets. The issue around debt and dealing with debt and climbing out of debt and rebuilding credit is very personal. I built this product based on my own experience of climbing out of debt and rebuilding credit and how difficult it was and all the things you don't know in that process. And we all make those mistakes. Because I chose jobs, often because of like the what they did for me, like in terms of the sense of like value they provided. I didn't choose the most highest paying jobs, right? Where, typically where, you can live whatever life you want. And obviously sometimes there's a gap between the life you can afford and the life that you want. Sometimes a gap because you lose your job or something changes in your life and you now are in a situation where you can't afford your bills. And I think society looks down on people who can't afford their debt. In fact, there was a study recently done that even said that higher income people were the most likely to lie about the amount of debt that they had. People don't like to talk to their partners about their debt or their credit score. And then the entire process of going through like debt collection specifically is very much a fear and shame based process in which you're made to feel like you're a terrible, horrible person because you can't meet your financial obligations, when you really are talking to commission salespeople whose job it is to get you to pay. They're not really interested in your personal financial position, whether or not you're going through a hard time. Again, they have a quota, sometimes daily, but definitely weekly. And that's what they're most focused on, not your own personal wellness. I thought that there's a better way to do this. Unfortunately, debt collection is a necessary evil because our financial system works because people repay their debts. When people start not repaying their debts, then lending becomes more expensive. It's harder to get loans. If your score is not great, or you're going to pay a lot more for those loans, or you don't get loans at all, and you only can choose really predatory products. So it is an important part of the ecosystem, but the way that it's been done has been done terribly. And so Remynt is really about how do we give people what they need in that time of crisis. So, we have a self-cure platform where people can go online, resolve their debt on their own terms. There's no preset repayment plans. People can start with this little $10 a month. They can do weekly, bi-weekly, monthly. They can pay with Venmo, PayPal, wherever their funds are. It's just about finding a place for people to get started. But the most important thing that we also offer is that by opting into a payment plan program on our platform, even with as little as $10 a month, people can rebuild their credit because we have a credit builder product, which enables them to open a credit builder line with a partner that we work with that allows every payment towards bad debt establish new positive credit on a new trade line, which is really novel because debt collectors typically have a debt collection trade line, which is very negative. And they do that because they want you to pay them. And by having that negative trade line, they can really force you to try to take action quickly to have it removed from your credit report. That's not the approach that we want. Remynt is not about penalties or penalizing people. The fact that people get sued for debt is absolutely horrible. It's something we would never do. That's why we love what you are doing and support it wholesale. But so we have on our platform the Credit Builder product, which is for free for people repaying their debt, and you get your credit score insights. We even have personal financial management tools for people to create budgets, set alerts, make debt repayment plans. In fact, within our tool is a debt repayment tool where you can choose the avalanche or the snowball method and see where that takes you. And then finally, we have a community on Discord where we do talk a bit about the psychological and emotional effects of debt, because debt is difficult, right? There's a lot of trauma. The two things we all need in our life is money and health, right? If you don't have one of those things, your life is very difficult, and often the effect of one has a big impact on the other.
So a couple things I love about what you just said. Number one is that there is a lot of shame that's kind of built into the debt narrative, especially in the United States. Like, even though we kind of work off of debt as a capitalist society, you know, like debt is just like a necessary part of the ecosystem, right? The financial ecosystem of the United States. And really, there's nothing wrong with being in debt. It's a really great way. It's a great tool that you can utilize to, you know, build the life that you want. Where it gets messy, obviously, is when it gets out of hand and you run into life events or circumstances that might make it hard to manage. Sounds like, Gwyneth, you've had personal experience with that, which is what inspired you to you know, create Remynt and do what you do. Can you tell us a little bit more about your story if you're comfortable sharing?
Yeah, no, I mean, I found myself like falling behind. I basically had like a roommate moved out. I thought I could live by myself. Turned out I really couldn't. Started to really mount debt, have debt fall into collections. And I had to like do a spreadsheet, figure out how I would pay off my debt. Going over time, you know, I actually moved out of where I was living and with a roommate. I had to completely restructure my life. This was when I was younger, not right now, but and I remembered how hard it was, like going through and figuring it out. But the thing that I learned in that process, as I was repaying my debts, and I was repaying them in full because I understood that paying them less than settled, you know, the settled actually has a lower, more of a ding to your credit report. I was finding that my credit was not improving. I didn't realize that paying off collections does not improve credit scores, because credit scores are based on open accounts, and a debt collection account is essentially usually a closed account. And so once it's been closed, the only value is if you have it reporting like as a charge off, right? Getting that resolved. But that won't boost your score or change your life in that way. And I think for me, a few years ago, when I started to think about what I wanted to be when I grow up and how I could take all of my experiences, personal and professional, and build something. And then I was looking at the fact that debt collection really hasn't evolved that much. It's still robocalling people on the phone and sending letters in the mail, and like nobody wants to, like, no one reads their mail and no one is like answering their phone, although people want us to call people, right? But like the point is that like I felt like there was a better way, and a way to provide agency to a consumer that's not being taken into consideration, right? Typically, like I said, like debt collectors are calling you, can you pay $100, $500? Can you, it's like name a number. You need to pay this amount. It's like, you don't know my financial position, right? And I feel like I have no agency. So if I'm got multiple collectors calling me and I have to pay my bills, I'm not going to call you back. I'm not going to call you because there's no conversation we're going to have in which I can say I'm not going to pay and you're going to say that's great, right? And so, what we really want to do is put that back in the hands of the person in distress. You know your financial position. You know what's going on with you. Get started, like I said, little $10 a month, whatever works for you. Pay where you want to pay from. But it's just a starting point so that you can start tackling everything else. Because again, I think the process is really overwhelming, even for the most organized, but it's absolutely debilitating when you have all the other complicated things going on in your life. If you're looking for a job, or you're going through health problems, or you're having a separation from a spouse or a partner, all of those things make dealing with this even more painful.
Agreed. And I think the vast majority of people don't take out debt thinking, I'm just not going to pay this off. I'm going to mismanage my debt. Most people take out debt with the plan to pay it back. But life happens,
100%.
Health issues, divorce, tragedies, whatever, life happens. And those kinds of events can make it hard to manage your debt. And so I love that. I love what you're doing with Remynt. And I just want to make sure I understand it right. And maybe you could even give us like a case study or an example of how exactly it works. But it sounds like if someone has had a debt go to collections, they can use Remynt to start paying that debt back and earn credit.
I wish it were that easy. So we actually partner with creditors.
Okay.
So we have like buy now, pay later platform and credit unions, and we do that. We do that primarily to help them do a better collections process that's focused on financial wellness. More people are realizing that financial wellness is important, and what we're really trying to do is transform an industry that has no regard from the person being collected from. Yes, people need to pay back their debts, and if they had the money, they've already would have paid it, right? Like that's generally the case. People aren't sitting on money that they're ignoring. Really rich people do that and they bankrupt LLCs, but poor people do not, right? The rest of us are not doing that. Nobody really wants to have collections calls. Nobody really wants to have their credit ruined. And so we work directly with creditors to say, no, there's a better way. Don't do the old way. Partner with us. And actually, you can actually create loyalty and lifetime customer value with the customers or the members that you serve by having a process when they're going through their darkest days that actually helps them bridge to the other side, as opposed to the like robocalls, where's your money escalation thing that typically happens.
So you guys partner directly with the creditors. And if a debt has gone, delinquent enough, before they send it off to like a third party collection agency, maybe they could use Remynt to get back on track, pay off their debt, and still continue to earn credit for paying that debt.
Exactly right. And and so we partner directly with them for them to do their collections and that at that stage. And again, what we're trying to do is change the industry. We want to get away from the fear and shame tactics. We feel like if we can prove that you can actually do better by doing good, more people will move this way in this direction. Unfortunately, there's a thought that you have to use the stick and not the carrot. And we're like, no, you can use the carrot and not the stick. And treating people who are in financial distress. Why are you making people's lives more difficult when they're having, right? So that's kind of really what I wish we had a way to easily go and like have consumers join us, but I haven't figured out that easy way to do that. Those are more like debt management or settlement companies, and those are a whole another beast that's much more complicated. Talk about those.
Well, I love that what you're doing is disrupting the industry for the better. And I agree with what you said. Like if creditors are willing to work with Remynt, I think it's a great opportunity to build lifelong like consumer loyalty to their brand. Because obviously, like you said, no one wants to receive a collections letter. It's the worst feeling ever, right? But knowing that you have other options and not have to deal with that third party collection agency, but you can deal directly with the creditor through Remynt and stay on track and get back on track, if you will. I love that. Well, Gwyneth, I was wondering if maybe before we move on to a few questions that have been submitted to the Debt Hotline, I was wondering if maybe you could give us an example. It doesn't even have to be a real example, but just a kind of an example of someone who might have used Remynt to get back on track and continue rebuilding their credit while they were paying off their debt at the same time. Could you give us an example?
Yeah, so we have one of our customers is a buy now, pay later platform. And one of the reasons that they wanted to work with us is because they're very much focused on meeting their buy now, pay later product is a bill pay. So you're having a problem, you need to pay your power bill or your car payment. It could be a healthcare bill. It could be a bill any size. They do cash flow underwriting to look at your finances to determine your eligibility. So no pulling of credit score. They're not doing some sort of predatory like lending price. There's a subscription fee and that's separate. But they decided to work with us because they got into that business because they really care about being there in a pinch when people have a tough time and not providing payday loans. And so we partnered with them. And from the first moment of outreach, people were so excited that their partner, that Pay Later, their name is, decided to work with us because we were a better alternative than all the other kind of collections things. And we were like, listen, if you're having a hardship, let us know. People signed up for the credit builder because they wanted to build their credit, and they were thrilled that with $10, like paying a little $10 a month or $10 every other week, that they could actually build their credit. We got thumbs up, which I never think that debt collectors ever get. But we got a really positive response, and people started to see their lives transform. And I think that's what's so amazing is that there is a real opportunity to support people in their hour of need and not judge people, but actually support people. And that's what was so, what we've seen. It's been so exciting. And like that reception we got from the customers of Pay Later was so like, we were so like, it was touching, right? Because in a collections process, you don't ever think of like positive responses from people.
No, yeah, and I love that you guys are getting that positive response. That's amazing. Well, I think that gives us a good background of Remynt and exactly how it works. And Gwyneth, we're excited to give you some questions that have been submitted to the Debt Hotline from real people, and hear your expertise and see what kind of insights you can offer. Just as a disclaimer before we jump into those questions, while Gwyneth is an expert in the debt space and the financial space, any of the information we share in this podcast is purely a resource and educational. Don't consider it legal advice or financial advice tailored specifically to your situation. Hopefully, this can get you some information that would be helpful to help you get back on track. But again, it's not legal advice. We're not attorneys. It's not financial advice. We're just trying to give resources and information to help people all along the way. So with that being said, we'll jump into our first question. This one's from Trina in Ohio. It says, after a messy divorce, I was left with a bunch of joint credit cards in my name. I've been chipping away at the balance for over a year, but my credit still looks terrible. How can I rebuild while paying it off?
Well, there's a couple different things. I mean, one of the things is look at, and it just depends kind of on your, like, utilization is the number one thing that really affects credit scores. So if you can in any way, like, look across all of your cards, say you have $6,000 in debt, you want to get to no more than 30% of that if you can, that is being utilized at any given time. So if you can chip away at utilization, that will start to see your score creep up pretty significantly. If in fact you might even want to consider opening up another, it sounds terrible, say opening up another card so that you can increase your overall utilization. Like, get that card, put it in the freezer, or freeze it, or whatever you might do. The key thing, one of the biggest things around credit scores is utilization, particularly if you don't have a lot of other negative things going on. And so the lower your utilization, the higher credit score can be. And so that's one of the things to look at. The other thing is there are a lot of credit builder products on the market. We actually offer one for $10 a month. Which is a on paper loan, and for $10 a month you can build your credit. There are other companies that offer similar sort of products. There are also even like savings programs that you can basically save money, put some money in the savings and then pay to get. So I would definitely look at credit builder products. They can be very, very helpful. There's also, depending on whether you're renting, if you're renting, there's some rental companies now that are allowing or enabling reporting your rent payments. And that's a huge thing because that's a large liability. And to be able to show that you're paying your rent consistently, assuming you are, if you're a renter, then that can be very helpful, and similar utility payments. And so there are companies like Susu out there that are doing that. And then there are companies, there's a couple companies out there that are doing that. And then more and more landlords are starting to offer it. And obviously it's a win-win for them because then people have a reason to pay on time. But I think there are creative ways to rebuild your credit without necessarily taking on new debt. And I think that people often think that, in order to like have great credit, I have to be using my credit cards. The answer is no, you don't. You have to have credit cards. And if you want to use them for like one subscription, you put one Netflix subscription on one card and pay it every month. That's great. And so, like I said, it's a game of both utilization and then a little bit of new credit history rebuilding.
I love the option you mentioned about getting credit for paying your rent. I personally rent right now, and I've never missed a rent payment. I'm like, my credit could be incredible with all of this history of never being late on a rental payment. There's so many tools though and options out there, I think, to build your credit, even if you are falling behind on certain lines of credit. Like if you're staying up to date with paying off other lines of credit, try to focus on those. And obviously Remynt is a great tool as well if you're struggling with credit card debt. So I love that.
Yeah. And always pay more than your minimum, right? The minimum is never going to get you out of debt. And I think it is, depending on how much debt you have, I personally found the snowball method to be better, right? That you pay off the smallest debt and you move your way up. The advantage of that approach is that, like, instead of paying 5 bills a month, now you're paying 4 bills a month. Like, it just makes things a lot easier. Avalanche is like the largest debt or the most significant debt, and that's great because you do save on interest. The challenge sometimes can be is that you don't have those quick wins. And I think what's really hard when you're doing a debt repayment strategy is that you need to have a sense of accomplishment, and sometimes you get really tired if you don't. And so you have to really determine your motivation. I'm a person that needs some sort of like quick wins, and so the snowball method was very effective. And then I moved up the chain. But again, it just really depends on how people think about it, and if you can conquer a few at a time, that's also helpful as well.
Love it. Well, let's jump to the next question. This one is from Marcus in Arizona. It says, I got laid off during COVID and missed several payments. I'm back on track now, working 2 jobs and trying to fix my credit, but it feels like I'm stuck. How long does it really take to rebuild credit?
So it really can take 1 to 3 years, just depending on, again, other factors on your credit report. If you have high utilization, if you have new negative marks, or you have collections on there, all of those things, unfortunately, are a little harder to shake. But with a year of really good on-time payments and paying more than the minimum really does help significantly. This is another time when I would also encourage the credit builder products, because people have seen scores anywhere from 10 to 60 or 70 points of a boost from using, whether it's the rental payments, utility payments, credit builder loans or credit builder lines. Is another really effective way to do it without, like I said, acquiring more debt, but maybe using things that you're already doing. But the good news is that as time goes on, it becomes less and less of a factor. But again, if you can get your utilization down, because utilization is actually the number one most impactful thing to your credit score. Yes, of course, delinquencies and all that sort of stuff. But the way you have to think about it is credit score is basically a report card. And the credit score is a risk, is a credit report is it's like a report card, but a credit score is essentially a risk model, right? So the interesting thing is, if you had a really high score at some time and then you defaulted or fell behind, then you have a larger fall because you were not predicted to default. If you had a lower score and you defaulted, then it's less of an impact. So it's an interesting thing. It doesn't seem like it would make sense, but it does, because credit scores are scoring models based on what they perceive risk to be. So, but the most impactful product in building credit is a credit card, because it revolves and it pays. And that's where they get the utilization. Like installment loans, you don't have the same thing. Charge cards, not the same thing. It's actually credit cards that are the most credit building product. And if you can have low utilization on credit cards, that helps exponentially in building your score. And you want to stay below 30%. I mean, the ideal amount is around 10%, which I know is not necessarily realistic for everybody. But if you can do that, that will help tremendously, along with, like I said, exercising credit builder products and other things.
Yeah, I think there's a lot of misunderstanding around how credit works, especially like the credit score. Like, it's essentially just a bunch of data combined together in an algorithm, and it's not always like 100% reliable. But yeah, it's a way to tell creditors like how trustworthy you might be in paying off your debts. And so I'm really glad that you were able to break it down. Do you have any other thoughts on just like how credit works and the algorithm itself?
Yeah, no, it's interesting because, there's a FICO score and there's a Vantage score. I don't know if you saw the announcement, like now mortgages will start using Vantage score. So what's really interesting is there's a couple things people need to. First off, the credit score you might see on a Credit Karma or some general place is not necessarily your actual credit score. There's a credit score for each different product. There's a bank card credit score, there's a mortgage credit score, and there's an auto credit score. So your actual credit score could vary depending on the product that you're using, because there's different risk factors related to those products. So that's number one. Number two is the scoring models change and they get updated every year. So not all lenders use the most recent model. So sometimes your credit score really depends on the model that someone's using. Like newer models, for example, around collections, as I was mentioning before, if you pay it in full, no longer will that collections will be a negative factor in the algorithm, where it for older models it was because it was just that it was there. So that's another thing you have to think about. And then is that Vantage score often is more of a trended score around looking across your behavior over a period of time, whereas a FICO score is much more of a snapshot in time, like doing today. And so that's the other thing. Your score on a FICO score and your Vantage score could be very different. Most people find, unfortunately, that their Vantage score is much lower than their FICO score because, again, they have different scoring models. They are proprietary. Nobody really knows what goes into them. But everyone's looking towards this whole trended model. And the trended model is actually looking across your accounts and across, say, like a year or a period of time, what is your payment history looking like? And so that's why creating long, good payment history is really, really important. And having a good mix of credit products by which you're doing that is also critical.
Yeah, I think to that point, it can be easy to like get obsessed with one line of credit that you might be falling behind on. And while that is important to try your best to stay, up to date with all of your payments, having like a diversified credit portfolio, if you will, I think can do even more for your score than like paying that one line of credit on time every single time,
Well, I mean, unfortunately, missed payment is a pretty big ding. So you don't want to miss a payment if you can miss a payment. But it is interesting. If you have a loan and you pay it off, your score will go down a little bit. Why? Because your credit mix. So it's really weird, but it's not a significant decrease for the people who are like, there are people who are obsessed with their credit scores and they get upset about this thing. But again, it just reduces. That's why you never want to shut down an open credit card account if you can avoid doing so, because then it just reduces that credit mix, that credit history that you had that is building upon. Because the other thing that you have is time is your advantage, right? The longer that you've had credit and been exercising credit and that you've had mostly good habits, it works to your favor. And I would also say in terms of like when people are falling behind, I know it's a pain in the butt, and I often tell creditors, please don't make it hard for people to skip a payment or indicate a hardship or to reconform their payments, because the problem is if you owe $50 but you pay $25, you're considered late still because you didn't pay the minimum. And so that's what often people don't understand. So it's important to pay something. And I think if you're in that situation, reach out to your creditor and see if they will, out of goodwill, not report it late, right? If you've always been a great customer, like, we've all missed like the payment date or gotten a late fee and you've been able to reach out and get that removed. So I think that that's really important to do if you're in that situation where you're like, hey, I can only afford to pay $25. I know my minimum is $50. Can you do something? Now, there is a risk, I will be honest, particularly in a credit card space. When you do let your creditors know that you're having a hard time, unfortunately, want to mitigate their risk. So some of them will close or lower your credit lines. They'll do the same thing in your default too, but there is a small risk that I want people to be aware of, that when you let them know you're in default, that they will lower your credit line to mitigate their risk so that you don't go bad and they don't have more debt for you to go bad on. But I also think if you have in that communication, listen, I'm in between jobs, but I'm about to get offered a job paying more than my last job. Like, there can be situational things, because the difference between what creditors look at and what the credit score looks like, the credit score doesn't know your income, right? It just knows your utilization of credit. When a creditor is extending credit, part of their equation is your income, because then they're looking at your debt to income ratio. And when they're deciding how to deal with you, that's why in general, when you have a hardship, sometimes they want you to show paperwork and all that sort of stuff, which I actually think is a bad idea, but some people do. But that's because they're trying to figure out your debt to income ratio, determine what you could or could not pay. And I think one of the things that's really hard is there's a lot of expenditures we have in our life, like childcare or elder care, or maybe even private schools, that are not a lending product, that wouldn't show up on our credit reports, but impact what we spend our monies on. And of course would be a priority over some, debts, depending on what situation you're in.
Yeah, I think that, obviously you're very experienced in this space, and you know so much about it. But I think what stood out to me from what you just said is that, creditors know different things about your financial situation than your credit score will tell them. And so that's something also to consider, but yeah, I just think that understanding better how the credit score works, the algorithm itself, like, yes, late payments really do matter, but so does your overall credit portfolio, and looking at how long you've had that credit. You mentioned if you pay off a loan and it drops from your credit, that your credit might go down a little bit, which is so ironic and funny to me. It doesn't mean that you're like a bad debtor, you know what I mean? If anything, it means you've done
No,
something right. But the score doesn't always
right.
reflect reality, I guess is what I'm trying to say. So
Exactly right. Exactly right. And again, it also like it's interesting in terms of like lenders and how they're thinking about you. You know, the credit bureaus collect a tremendous amount of data, right? So your creditor, if you're having a struggle, might pull your credit report, which is different than your credit score, right? Because even and then they'll see, oh well, Susie has $20,000 in collections. Oh no, right? If they look at your score, they don't see a bunch of collections yet, that's a positive thing, right? In terms of how they'll want to work with you in your financial situation. So that's the other equation. They're also looking at, I mean, interestingly enough, when they often reach out to you, like say maybe debt collectors weren't like, they decide they want to sue you. You're like, why are they suing me now? They might have seen that all of a sudden you made some large payments or started paying off other debts, and they're like, oh, now you have money. I want your debt, right? I want you to pay that off. So they are more sophisticated. Lenders are like really following your behavior, and the credit bureaus provide a treasure trove of data around your behavior, the number of payments you made in the last few months, the size of those, the aggregate number of those payments, and that's why a lot of time with litigation, it will start happening when you start paying other people. Then someone's like, oh well, they can pay them, they can pay me, right? Which is terrible, but that's how they approach it. That's how they often decide to sue.
Yeah, and that's really helpful to know. At Solo, we help people who have been sued for debt respond, defend themselves, and try to get in a position to negotiate and settle the debt if it is valid. If it's not valid,
and I had that happen to me. And luckily I called up the creditor, and because again, most of them don't really want to take you to court. It can become costly. And so, especially if they want you to deal with them, they just want you to answer them. They want you to put it to rest. That's why they're doing it. And they know that the only way they can get your attention. And the other thing is that every state has a different statute of limitations. And so if you have the twofer of like they're approaching the statute of limitations, and they think you have capacity, they're going to absolutely sue you so that they have enough time before the statute of limitations happens, because a lot of laws go into effect around disclosures after the statute of limitation. They can technically still pursue the debt. They can't sue you unless you then acknowledge after the point of the statute of limitations. If you acknowledge that the debt is yours, then you basically restart the clock. And so people need to know that you should avoid restarting the clock. So that's something else.
Yeah, that's one thing that we are trying to educate people on at Solo too. We have a guide for every single state on the statute of limitations of debt, which varies by state, but usually it's somewhere between 4 to 10 years. Right. And so, yeah, knowing the statute of limitations on your debt can make a huge difference in terms of not so much in terms of your credit score and whatnot, but in terms of whether or not you'll get sued and legal action will be taken. But I do want to echo what you said, Gwyneth, that, and you speaking from experience, having been sued, you called up your creditor and it sounds like you got it resolved, right? I think that is such a good thing to emphasize, that if you are willing to engage with your creditor, or if you're being sued by a debt collector, if you're willing to engage, like, you can usually find a resolution. At Solo, we have a tool called Solo Settle that you can use to kind of make the process more digitalized. If you're not really in the mood to play phone tag and wait on hold all day with a collection agency, you can use Solo Settle to negotiate online and settle the debt that way. But engaging, reaching out, explaining your situation, like, that's what's going to get you a resolution more so than avoiding it. And I also want to echo what you said earlier. Like, I wish that creditors did have a better way for people to maybe skip a payment if they're facing some sort of hardship in that moment. I do think creditors could do a better job at like listening to consumers' hardship and working with them if they do need to skip a payment or two or get on a new payment plan. But I think the key for both creditors and consumers involved is communication. Nothing's going to get resolved if you're avoiding it. So.
Yeah. And that's the thing. And I think it's really hard, because I get it. When you're overwhelmed, you don't want to. And the nice thing, if you're being sued specifically, they will, then you don't need to file, like you can talk to them and get them to file with the court to basically hold off on go into proceeding, and then you figure out the settlement agreement, and then they will ultimately dismiss the case altogether once it's been resolved. But it's again, you don't have to go to court and testify and all that sort of stuff if you don't want to. But if you don't do anything, they will get a default judgment and they can garnish your wages. And in most states, they can garnish your wages at 25%. Some states have like realized the issue and changed it, but it's really, it's actually, crazy to me because they can garnish your wages without regard to whether or not that's what you can afford.
Yeah, I think in a lot of cases, wage garnishment can be kind of the worst case scenario in a debt situation. And, I'm just imagining in my current situation, if all of a sudden 25% of my income was being taken from me, I would not be able to pay my bills. I would get even further behind with my other debts. Like it just causes more debt issues when you avoid your debt issues. So it's very specific.
It spirals because again, like the problem with going delinquent on one debt is, again, your creditors are paying attention, right? I've seen that happen where like, oh, I'm accumulating too much debt or whatever, and like all of a sudden some credit card is lowering my credit limit, and it's interesting because it becomes like if you were living off your credit cards, right, paying and living and paying and living, the minute that your credit lines start to be shrunk, they're basically pushing you over into delinquency for a lot of people, because now the little bit of runway, and granted, your credit card shouldn't be your runway, but let's face it, a lot of Americans it is. Once they take that away, then that tips people over into delinquency sometimes because they don't have that extra. They were paying and living off of a credit card. And if your creditor sees that you're defaulting somewhere else, they may shut down that credit card and your ability to do that.
Yeah. Well, I think the big takeaway from this answer to Marcus's question is like communicate with your creditors. There are ways to resolve your credit and debt issues, but and it may take some time, but communication is key.
Yeah, and by the way, they'll take any amount pretty much. Like they'd rather get something than nothing. So they might start off a hard bargain, but in general, just for their numbers and their metrics and all the things that they're trying to accomplish, they would rather get something than nothing. And I will say, one thing to think about in the long term for people who don't realize this, if you ever go to get a mortgage, if you don't have a mortgage now, or you want to get a new mortgage, even though a debt may have fallen off your credit reports, theoretically, it still exists. And a lot of mortgage companies will find old debts that you haven't paid and basically tell you if you don't repay that debt, they won't give you the preferred interest rate. And those interest rates make a big difference in hundreds of thousands of dollars, depending on the size of that loan. So that is something to consider when people think, oh, I don't want to pay these old debts, they're falling off the statute of limitation. Yes, you can get away with that. But if you want to buy a house in the future, mortgage lenders, because it's a long, big loan over many, many years, will not look favorably upon that. And there's many stories, you can even look it up on Reddit, where people had to go find and pay an old debt in order to get the preferred mortgage rate they wanted.
Craziness. Well, I think, Gwyneth, we've got time for maybe 2 more questions, if that's all right with you. Let's move on to a question from Elisa in Texas. It says, so Elisa says, I just paid off an old collections account, but it's still showing up on my report as settled. I thought paying it would help my score. What can I do?
So unfortunately, it doesn't. As I mentioned to you before, paying settled is in the new scoring models, that still affects your score in a negative way, whereas paying it in full doesn't. And again, the older scoring models are even more detrimental. What you can do is try to reach out to that creditor and see if they'd be willing to remove it. I don't know that they would, but you can always, there's no harm hurting, like sending them a goodwill letter and saying, listen, I was going through a tough time. I paid this off. Because the truth is, at the point at which it was charged off and put into collections, you had like penalty APRs, interest fees, all that sort of stuff. You probably still paid more than what you actually fundamentally spent. So that's something to try to do. Also, again, credit building products would also be something that's very helpful. I mean, the further that you get away from that settled, like, another year or so, it won't matter anymore. But in the short term, unfortunately, there really isn't a whole lot you can do other than try to do the good goodwill approach with the creditor to see if they would be willing to update it or remove it, and then also credit builder products.
Yeah, in my experience, there are creditors and collectors that are willing to remove like a mark from your report if you just ask them to, and if you've settled at a reasonable amount, But I do want to emphasize that settling a debt does not look as bad to your credit score as a delinquent debt. So it should improve your score to an extent, but it still may be a negative mark on the score overall. But nothing looks worse on your credit score than delinquent debt, especially like old
100%.
delinquent debt. So
100%.
yeah. Okay, perfect. Next question is from Tyler in California. I think this will be our last question for the day. Tyler says, I'm 28 and dreaming of buying a house before I'm 30. I have a few collection accounts from when I was younger and made dumb money decisions. I've paid most of them, but how can I rebuild fast enough to qualify for a mortgage?
Well, again, this is a great example. If you can go back to the collections agencies to see if they will delete them, if it was a collections agency, because that will help tremendously. If you can get rid of those would instantly help improve your credit score. I would also take on some credit builder products. If you can get your landlord to report your rent payment, because it's very applicable, right? If you can afford and pay your rent regularly, then obviously you can afford a mortgage. Same thing with utilities and other credit builder products. If you don't have a good credit card, take out one credit card, use it very sparingly, because, as I mentioned, the most influential credit product in your credit score is a credit card, because about a third of your credit score is based on utilization, right? And so installment loans don't have anything to do with utilization, but credit cards do. And so having a credit card, using that and paying that regularly can also really like skyrocket your credit score as well.
Yeah, and it sounds like, Tyler, you have a couple years before you turn 30. So if the goal is to buy before you turn 30, I think you've got time to work out your credit score to qualify for a good mortgage. And I would also say your credit doesn't have to be like in the 800s to qualify for a mortgage loan. There are options out there. We actually recently interviewed a mortgage broker in California named Scott Griffin, and he shared a lot of information about, resources and different loans available to people who maybe don't have like this phenomenal credit score. So even if you're somewhere in the 600s, like you still can qualify, especially if you're a first-time home buyer. So look into your options.
Yeah, the only thing I would say, and that's absolutely true, you can get loans, even car loans, with lower credit scores. The difference is the interest rate that you'll pay. The difference between a 3% and a 6% interest rate is $300 for a $300,000 home is a $300,000 difference. That's $300,000 you could have had in your pocket from a better credit score. So while it's true that you can get a loan, obviously, if you can get a better credit score, then you can get a better loan. And instead of giving that extra $300,000 to the mortgage company, that could be used in your life. I mean, the interesting thing is, our whole society is built on this whole getting a mortgage so that you have to work for 30 years and they have people in the workforce. So just know that if you can also nowadays get shorter term mortgages as well. And you can also refinance. That's another option. So if you can't early on qualify for the level of an interest rate that you'd like, but you can still qualify for a loan, you can always choose to take out a loan and then boost your credit score and refinance. And that's what I would highly recommend. If the goal is to get a house, regardless of your credit score, do that. But then, like I said, refinance. Because again, oftentimes people who don't make a lot of money give a lot more money away, because that interest is what kills you. When you actually start computing how much money you're actually spending, that money could have gone to other things in your lifetime, then it does make it.
Totally. Well, I think with that, we'll probably wrap things up. I'm going to go ahead and share a link in the live chat for all of our live viewers. Right now, I wanted to just end by saying that Solo is hosting a giveaway during the month of July to celebrate Independence Day, which we had earlier this month on July 4th. The giveaway is called Independence Day Giveaway. And we are trying to help people find a way to end their debt. So we are going to be rewarding one lucky winner $4,700 to help pay off their debt. We're also giving away weekly prizes of $500 that we'll be announcing every Friday. So you can enter the giveaway tonight and potentially win tomorrow. We'll be announcing our weekly winner tomorrow for that $500 mini prize. But like I said, $4,700 is the grand prize that we'll be giving away to one lucky winner at the end of the month. That number is the average amount that people get sued for on Solo's platform. So we're trying to help people who have been sued, or even people before lawsuits, just find a way to end their debt and find that independence from debt that I think most of us are searching for. So I do want to say also, if you want to enter that giveaway, you can go to solosuit.com/giveaway. And I dropped a link to it in the chat as well. And then I also wanted to say that if you are falling behind with your debts, and maybe you want to communicate with your creditors or look for tools to get back on track while still earning credit, Remynt is a wonderful tool that you can use to do that. The website is getremynt.com, and Remynt is spelled REMYNT. So getremynt.com, and we'll be sharing the link as well. Any other last thoughts from you, Gwyneth, on the topic at hand?
Yeah, no, I mean, on our website, we have our credit builder product. You can sign up for the wait list. It's going to go live like next week. And then basically for $10 a month without actually accruing any debt, you can actually build your credit. We open a $2,000 trade line so that you can, that every month that you're paying the $10, it's showing a very low utilization on a high trade line. And it's a way to build your credit without actually getting into any debt. And it's like just $10 a month. So if you want to take advantage of that, we highly recommend you do that, because we believe that people should be able to build credit without having crushing debt. So thank you so much, Hannah, for this opportunity to talk about what we're building at Remynt. Thank you all for tuning in. If I can ever be of service in any way, please let me know. This is something I'm very passionate about. I want you to help me change this industry so that we love solo suit, but that we don't need solo suit because people are no longer getting sued.
Yes, and I think that's the ideal outcome, right? No more lawsuits. But in the meantime, if you have been sued for debt, you can use Solo to respond to the lawsuit, defend yourself, and then negotiate to settle the debt. Go to solosuit.com if you're interested in doing that. And again, if you want to build your credit while paying off your debt, if you've been falling behind, go to getremynt.com. Another great resource to help anyone maybe struggling with debt. And then lastly, again, we host this podcast twice a week. And we like to answer live questions from real people about debt. So if you're listening, you can call us at 801-613-8181. That's the Debt Hotline. You can submit your questions there, and we'll be answering questions live twice a week. So Gwyneth, thank you so much for joining. We really appreciate you sharing your insights and expertise. And I want to wish you the very best in your journey with Remynt. And I just know that you guys are going to be making some really wonderful, positive changes to the debt industry.
Thank you. Thank you all so much. Thank you for what you do for helping people who are obviously at their lowest point. When you get sued, there's nothing more stressful and like upsetting, especially if you couldn't afford your debt, you can't afford a lawyer. So thank you for doing that.
Yep. Thank you so much, Gwyneth. Thanks everyone for watching. This is the Debt Hotline, and we're rooting for you, and we know that you can find your debt resolution